Thank you very much. As mentioned, I'm Jared Psigoda. I'm the founder of BitGuild, also in the Hupan School of Entrepreneurship class, so advertisement for them. And I've been mining and trading virtual currencies for 20 years. Today, I'm going to talk a little bit about blockchain and incentive structures, not from an economist's perspective, because unfortunately I am not one, but from the perspective of a lifelong gamer and somebody who's worked in the gaming industry. So incentive structures have been integral parts of our organization since the beginning of time. It's very difficult for us to imagine building anything great without being able to get others to help join our cause. Now, incentive structures throughout history started out fairly barbaric, tended to work out something like this. You do this, and you live to see another day, which is a fairly compelling argument. And of course, here we're talking about slavery, serfdom, or indentured servitude, which most of our early world was built upon. Later on, we became a bit more civilized, and we started offering the basic necessities of life, like food, clothing, or shelter. And then ultimately, we started offering what we're more familiar with now, which is some type of money or compensation for work performed in benefit to the organization. About 500 years ago, we evolved a bit. Stock structures or capital structures, as well as public capital markets, became a thing. And now we are able to better align the incentives of different people within the organizational ecosystem. Not just founders, but investors could put money and resources in expectation of return on their investment. And more so over the past 100 years, we started giving out stock options to employees in order to incentivize them in the long term with the long-term goals of the company. And everything's perfectly aligned. Nothing that could be improved here. Never hear about misalignment of incentives between employees and management or stockholders and founders. Not exactly. What I actually feel is missing here is the customer. And in the olden days, during the industrial era, when we were just selling things to people, that might not have been a big problem. But companies are a lot different today, especially we've been talking about these platform companies, and the role of the customer has changed. In many instances, the customer is the product now, and they're being sold to third parties. Obviously, this has been something that has been in the news quite a bit recently. So this is where I feel that blockchain is going to come into the picture. I believe that blockchain will fundamentally change the incentive structures of the organizations of the future. And they will be changed in a manner in which the customer or the user is going to become a more integral part of that ecosystem. Before I explain exactly how that's going to work, I need to talk for a minute about mining. It's a cryptocurrency concept. Anybody who's researched the industry should be familiar with. But when we think of mining, a lot of times we think of a room with a bunch of computers, ideally somewhere cold like Finland or Russia, where you have access to cheap electricity. But this is only one aspect of mining. And thinking back as somebody who's worked in the gaming industry, I came to realize that we actually started mining virtual currencies over 20 years ago. And as a matter of fact, in the middle of 2008, about 4 or 5 months before Satoshi Nakamoto released the Bitcoin white paper, somebody actually made a documentary about this industry, which we called gold farming. And I've got a little clip of it here.
I struggled for years trying to explain what it was I was doing.
Usually I just say I work with video games, because if I say, I'm a virtual currency broker, people just kind of look at you like, what?
You've got games that are based entirely on selling gold on Facebook. Virtual worlds are creating demands, and somebody's going to have to meet those demands. If they don't, somebody like me will.
It was at that time that I realized that people will spend money on virtual things no differently than they would for tangible things. So that was kind of that eureka moment for me. And that's really when my company was on its way to doing $100 million in revenue.
And they said, so what you got to do, you got to take all the profit we've made, and you got to give it to us, or we're going to sue you to tomorrow. Oh, this is gonna end badly. Oh!
And there are a lot of people who hate what we do.
Business versus family. I didn't do well.
This is the future of the video game industry.
And this has happened on a massive scale in countries like China.
比如说当他们问的时候呢，说 OK， 那休息，说他们没有底薪的。
The real and the virtual starts to blend together.
But I always looked at this as something that could go poof instantly.
So if anybody is interested in kind of what I honestly feel is the predecessor to cryptocurrency, this is a good documentary to check out. It's, I think, on Amazon Prime right now. That was a younger version of me with the shaggy hair and the 25 bracelets on my arms. I guess we all go through phases. But what we basically realized is that there was a market for buying in-game virtual currencies with cold hard cash, and we actually started doing this in about 1999. And for those who are not familiar with how video games work, it's fairly simple. You start off, you're level 1, you wear shabby clothes, and you choose a class in a race. You could be a human warrior, or an orc hunter, or a dwarf paladin, and you progress through the levels of the game over weeks, months, and years in an effort to become a much cooler character and be the most badass person inside of a virtual world and ride a big red flaming dragon. But the way it works, you start at level 1 and you essentially gain experience to level up your character. And this can be done through completing quests, doing trade skills like fishing or blacksmithing, but the most common way is killing monsters inside of the game. Kill a monster, gain experience, level up, and this process takes, again, weeks, months, or sometimes even years to reach a maximum level. And at the entire time you are progressing through these quests and you're killing monsters, you're gaining the virtual currency inside of the game. It is essentially minted by the game developer at the instant that you kill the monster. And the entire gaming ecosystem runs on these virtual gold pieces that are picked up. So of course, again, economists should understand that people were playing these games for hours and hours a day, and we realized something very important, which was that, number one, there were rich dentists and doctors and economists in the places like the US and Europe who didn't have that much time to play the game, and then we had people in developing countries like China and Southeast Asia who had more than enough time but were looking to make some money. So in my opinion, it's almost entirely a proof of work algorithm. In the mid-2000s, there were hundreds of thousands of people in China whose sole job was to sit in front of a computer and kill virtual monsters in an effort to make virtual currency pieces to sell to others. And this became huge, of course, with the release of World of Warcraft and China being able to play games with Westerners. This was a farm I had outside of Beijing back in 2008. But then something happened in 2008, is that people got smart. They realized, even though these workers are cheap who are farming the gold, we could probably figure out a way to eliminate them. So they started writing automated computer software that would play the games on their behalf. You opened up a computer, you had 10 copies of the game running, and then if you had a little bit of capital, you had a warehouse with a bunch of computers all playing the game. For some people, it went well. For others, not so much. But looking back on this, what do you see? You see a warehouse with hundreds of computers with really good graphics processing power, and they are running a script to automatically generate a virtual currency for 24 hours a day, 7 days a week. And so it should make perfect sense to anybody that if you actually go and look into the early days of cryptocurrency, a lot of the early pioneers came from video games, and especially this gold farming. I, unfortunately, was not one of them at the time. So now getting more into the token incentive structures. Blockchain allows us, through the use of mining, to create a type of organizational incentive structure where the employee is part of the picture. And happens through something that I call behavioral mining. Again, mining not just being GPUs printing out tokens, but it's just any type of behavior in contribution to an ecosystem that produces value and a reward system that they get rewarded based on that. To keep it simple, a product's user base, through contributing value, receives tokens and can become stakeholders. And I tend to say become the largest stakeholders because I think that's how it's going to be done in the future. So for example, in gaming, we've tried it out like this. We've built decentralized games that run completely through smart contracts using somebody's blockchain address as the account system. We've created similar to equity structures with tokens where the users own 60%. Now, this is not an ICO. We're not selling tokens. The tokens start at 0. They have a fixed cap, and you start mining. You can mine in one of several ways. Any type of value contribution that we think is valuable to the ecosystem is rewarded with tokens. It could be as simple as paying money. If you spend $10, you mine 100 tokens. But it could also be things like moderating our forums or our chat channels, doing customer support work, translating our marketing materials, finding bugs in our product, or anything that creates value. And the founders' tokens, or the company's tokens, are simultaneously released at the same time the users' tokens are. So if it's a 60-40 split, when users mine 6 tokens, the company will be awarded 4 tokens. They don't get any in advance of users creating behaviors. Of course, the earlier you participate, the lesser your mining costs should be. Similar to equity structures where you go through seed, angel, ABC, pre-IPO, then you go public, somebody who's a participant in this ecosystem on day 1 will have an advantage over somebody who participates in day 200. And of course, the tokens need to have benefits, and these benefits can either have utility value or security value. Utility value is fairly simple. In a gaming world, you could use them to buy some certain item or armor or weapon that could only be bought with a certain number of those tokens. But the real future of this, I think, is going to be in security value. So something like a game, which is a very cash flow positive type of an industry, and a game that runs by smart contracts where all the users' accounts are blockchain addresses, you can essentially issue them dividends on the overall success of the game every month, every week, or every day if you wanted to. And once you do this, you really start to see behaviors change because those dividends are being issued based on how many tokens they hold, which is a factor of their contribution to the ecosystem. And of course, they're liquid. Obviously, any great thing about a cryptocurrency is it can be freely traded on centralized or decentralized exchanges. So my prediction is that gaming is going to be the first industry that actually gets this to work for 3 reasons. Number 1 is that game designers, aside from economists, have a fairly good understanding of incentives. Perfect example, the greatest rage in the US and Europe right now is a game called Fortnite. Really fun, completely free to play, don't need to spend a dime. Still grossed $2.4 billion last year. Second is that, as mentioned, gaming is one of the first real use cases for blockchain and cryptocurrency in application outside of the payment sector right now. And again, we started fairly simply with just putting digital 2D cats on the blockchain, but it's actually evolved quite a bit over the past year, and this is one of the quickest growing areas in blockchain, in my opinion. And then finally, a point I've always made is I don't have any hope for blockchain in quote-unquote real industries unless we already have it working in virtual industries. And by virtual, I mean where the things of units of value that are being exchanged are not tied to the real world. So obviously game currency and game items are an example, but also so is most of the finance industry. Stocks, bonds, debts, etc. Those are all essentially virtual things that could be traded through smart contracts fairly easily. So I hear a lot about, real estate and supply chain and all these very crazy concepts being put on the blockchain. In my opinion, is if a game cannot be built using the blockchain and become popular, then there's not much hope for the other things. So finally, just thinking about what is the role of the customer in your organization. And some organizations are better at this than others. Some are more customer-centric than others. But what if we could do it better? How would the behavior of users or customers change if they were actually significant stakeholders in your organization, or even primarily the major stakeholders. And from our experience, we've seen a few things. We've seen marketing costs go down. We've seen virality go up because users are much more willing to tell their friends about the product. And we've seen contribution to the product, rather that be monetary, like spending money in the game, or just willing to volunteer, go up orders of magnitude over a traditional product. So again, can't really discuss too much about this in 15 minutes, but anybody can feel free to email me. I've written some stuff on it, and I'd be happy to share that. Thank you.